Welcome back, VIP. Quick video just to talk about a couple of things in how the week has evolved, and just want to also touch on the day count, which we started to talk about last week, okay, or maybe it was earlier in the week. So I want you to go back to Tuesday's trading, which is here, okay. So Tuesday has taken out Monday's low, right? Monday is the start of the week, and therefore Monday sets the high of the week at that point in time, okay, and the low of the week. So when Tuesday trades down and takes out Monday's low, notice the equal lows, right, engineered sell side, then Tuesday has essentially taken out the low of the week, okay? Now, from a day count perspective, in a 3-day cycle, that establishes Tuesday as day one, okay, because Tuesday took out the low of the week, which was established on Monday, okay? Now, that's confirmed when Tuesday breaks this daily high, right, because Tuesday taking out previous Monday's low, right, previous daily low, which is also weekly low, and then trades above Monday's high, and therefore that confirms Tuesday as day one. You need a previous daily high to be broken, right, to confirm the day count, okay? So Tuesday is day one. Tuesday has essentially taken out the low of the week. That's why it's day one, okay? Now, you can see what I want you to focus on is how many times breakout traders have entered the market. When I say breakout traders enter the market when a previous daily high has been triggered, right? So here on this day, breakout traders have entered the market because the previous daily high has been triggered. Wednesday, breakout traders have entered the market because a previous daily high has been triggered, right? So that's 2 days. Okay. On Thursday, breakout traders have entered the market, okay, because the previous daily high has been triggered. That's 3 days of breakout traders now in the market. None of these folks have been stopped out, okay? And then on Friday, breakout traders have entered the market because a previous daily high has also been triggered, okay? So Tuesday 1, Wednesday 2, Thursday 3, and Friday 4. 4 days continuously where we have breakout traders entered into the market, breakout long traders who have orders to go long at the breakout of a previous daily high. What I like is previous daily high taken, rejection, and short. That's my favorite setup, okay, where a previous daily high has been taken, but it's a false break and a reversal. In this case, what we've seen all of last week, starting from Tuesday, which is day one, because it took out low of the week, we have seen continuous breakouts, right, where breakout long traders are now in the market for 4 days, okay? And so these folks need to be stopped out. Now, you've also got to ask yourself, why has the market pumped up on Friday, right, when there's been no news? So we need to be aware of that. Friday has had a decent pump up, around about 300 pips, I think, maybe more. And you've got to ask yourself, why has it pumped up? There's been no news. Where's the volatility coming from? There's no volatility injection. Okay. So that's something to think about. I'll talk about that in a moment. Okay. There was a question about what are my fib settings. So firstly, before I show you my fib settings, remember, I'm only using the fib to calculate range projections, not really using the Fibonacci ratios. Okay. We're just using the fib to project 100% range expansions or a multiple, a different factor of 100%, sometimes 200% or 350%, or sometimes even 300%. So I'll show you that in a moment. In fact, let's look at that now. This is Monday. Okay. Now we know Monday is a false move down because that move down did not materialize, right? It was a false move down. Since that false move down, we've been rising. So at the start of the week, Monday and Tuesday, there was a false move down. Okay. And so let me show you the fib tool. We'll take Monday's high and let's take Monday's low. And we're projecting up. We can also add 200 to this. So these are my fib settings. This is a range expansion, basically a 100% range expansion of that move up from the high, which is that blue line there. That number 2 will do that. And if you're projecting high, then you need to put your mouse first on the high and then drag it down to the low, and that'll project up. Okay. If you put your mouse first on the low and then on the high as your second click, then that'll project low. Here, I've started my first click on the high, second click on the low, and so this projects up, okay, by 200%, 300%, and 350%. And I've got other settings, 450%. You can also use 400%. Okay, the numbers really aren't that important. It's when you have alignment with other PDRAs. Okay, but in this case, we don't have any PDRAs above. Okay, I'm going to turn off 2 and just keep 3 and 3.5 on for this example. We don't have PDRAs above. Okay, down here we do, because we can project 2. Here, 200% aligned with the previous high when we're down here. Okay, so a 200 range projection from Monday or from Tuesday's low, right, where we have the reversal on Tuesday. Right there, we got a entry signal on a 15-minute chart, okay, which I've already spoken about. It's the inversion fair value gap, entry at 2:15, 2:30 a.m. candle in the London session on that Tuesday, which is the low of the week. At that point, we've already got Monday printed, and so therefore we can use this range projection and expect at least a 200% range expansion, because that 200% comes in, that blue line there, above the most recent high, right, when we're down here. That 2685 was the most recent high, okay? So that would have been a valid expected target based on a range projection, okay? And I think we were targeting 2674, okay? Now, these additional range projections, you really don't know you're going to get there because there's nothing on the left to verify higher time frame PD arrays that align with those targets. However, you can see how accurate they have been. With 300%, we got resistance, okay? And look how close we've reached 3.5, and I think we will get 3.5 probably on Monday. Okay, so they are valuable to have in your charts, but you can't expect the higher ones unless you've got other PD arrays that you can align with. In this case, we didn't, okay? But if we were still looking for higher prices Thursday and Friday, then we could have used those levels from Monday as potential targets to look for, okay? Now, the midpoint is often support, okay, but we did not get anything trade down into there. But we can use some of the other manipulation legs, like, for example, this is also manipulation because now we're trading above. Okay, so we can use that, for example, as well. Let's go to the low of that. And even you can see here, we're getting very close proximity targets from that manipulation leg. Okay, I like to use the 200%, right, which is range expansion. Okay, so we got that pretty easy target. But notice how the midpoint here has provided the exact level of support on Thursday. Right, price has come down into there. That's when I would use that and pay more attention to that when price is holding right at that level. It doesn't mean automatically enter. We still need a setup, and we did have a setup at that level on Thursday, last hour of London, and it was the exact same setup on a 1-minute chart, which was our inversion fair value gap setup, just the same as this one here on Tuesday on this 15-minute chart. We had the exact same high probability entry signal on a 1-minute chart in the last hour of London, which I've already spoken about, as well as a bullish breaker setup at inside of the 450 to 510 macro. So this is just another level of alignment to confirm that long setup. That's how I would use this, and then I could use this range projection as my target, okay, which worked out really well. Okay, so that's just something on the side that I want to mention. I don't really use them a lot. I rather select targets based on what I see on the charts. Okay, but if you want to use those, you can. You're free to use them. They do work with precision, especially the 100% range expansion that I've found to work 9 times out of 10. And then it depends how bullish you are if you want to use the 300% or 3.5 level. Okay, so having breakout traders in the market for a continuous 4 days and having Friday pump up without any news, let me turn all these lines off now, leads me to believe that we should see a pullback. Okay, and ultimately, let me just turn these lines back on. We do need to come back to 2685, okay, because that is where the breakout traders have entered the market, right? So this is the previous high. We've gone through the previous high this week, okay, and breakout traders are in the market from that level. So we need to come back down there, 2685. That doesn't mean we come down in 1 day, but what I want to start to see is movement coming down to there, okay, 2685. And notice how you can see, if you can see the breakup above there, come back down into these breakouts, right? That's basically a bullish breakout high time frame. Okay, where we've gone through, right? So we had a low, right? High, low, and then through that swing high, and then push back down into. So 2685 is a good level because that's where the breakout trader got in. That was the previous high. Come back into that for continuation higher. Okay, so we need to come back down to 2685. So I'll be looking for that. I think we should get that next week. The only issue with getting that next week is we don't have news until later in the week, right? So news is on Thursday. Okay, we don't have any other USD news until Thursday, and we also don't have it Friday. So that kind of leads me to question whether we will make that move down. We may, and I expect it to be next week. Okay, but as I said, we kind of want to see some confirmation of that move down. Okay, I don't think it's going to be in 1 day. What I want to see on Monday, now let me turn off these lines, is looking at a return back to at least 2700. Okay, Monday or Tuesday, right? And to do that, I think a really good trade or level to look for is this fair value gap on this 15-minute chart. Okay, so we may get a push higher to take out high made on Friday. Okay, so Monday should use this fair value gap to push higher. Okay, I won't be taking along there, but what I want to see is I want to use this bullish fair value gap as an inversion to go short. Okay, so I want to see the market take out high Friday. It doesn't have to. Then come down and close on a 15-minute basis, close below that bullish fair value gap, which would indicate a failure of bullish signature push back up into that level. I want to see that occur in Asia, right? 9:30 is a good time. So I want to see that in the Asia kill zone, right? I prefer 9:30, but any one of the macro times will be fine, okay? And I want to see that, and then I want to have a short setup, okay? Breaker or bearish order block, okay? Or just we can even just use that inversion, that this fair value gap, which is bullish, as an inversion fair value gap once we close below, we'll push back up into it. And I want to see it move back down into this fair value gap here that we see, right? This is very similar to the setup we had, I think it was Monday last week. We had this setup, and then we took a long. I didn't take the long, but students took a long, and that's what I want to see, okay? It will be better if we don't take out Friday's high, right, before coming down here, okay? Then that leaves Friday high intact to be taken once we get down to this 15-minute fair value gap. That's the exact same setup that we had last Monday, okay? Now, notice what I said in one of my last videos. On the way down, we want to see that the market has already engineered liquidity, right, before getting to our objective. This is our objective. So you can see these equal lows have already been engineered. They are in the way of this objective, okay? So the market knows it needs to come down here, and it's engineered liquidity, right, where people have their sell stops underneath, right, this double bottom for anyone that's already long, okay? And the market will use that as fuel to get to this objective, which is the 15-minute fair value gap, okay? So what I want you to look at on Monday is a move down to this fair value gap for a long. That long, the short is high probability, okay? Entry is going to be using that bullish fair value gap as an inversion fair value gap. We want to see a 15-minute closure, okay, beneath that, push back up. Timing is important. I want to see that at 9:30 or 9 o'clock's okay as well, okay? But it needs to be in the second hour, okay? And then we want a move down to that fair value gap, and it will be higher probability if we leave Friday's high intact, because then that leaves Friday's high as liquidity for a long if we get the right setup down here. The short is high probable because we have already engineered sell stops, right? Sell side liquidity with those equal lows, okay? So that's something that I'm going to be looking for. Now, we want to see a long setup form here on Monday, okay? Maybe in Asia, 10 a.m., right, last hour, or London for a move back up to take out the buy side, which is Friday's high, okay? So that's very clear instructions for you for Monday, okay? So that's what I'm looking for. And then I'm going to be looking for, and I might do separate videos on this, on movement lower, as explained, back to at least 2700, okay? But ultimately looking for to 685, right? Now you can also see on this 15-minute chart that we've also already engineered relatively equal lows, where there's a lot of sell stops, right? Sell side liquidity under these lows, and there's fair value gaps here as well, okay? And so that is no coincidence to be just above 2700, okay? So I think it'll be really good for the market to come down, get everybody short, okay? This is where I'd close out those shorts, and then get everybody wiped out, okay? And long at the same time, right? Wiped out meaning that anyone that's short will then be stopped out with this little move up, okay? And then straight down to 2700. That's what I'd like to see. It doesn't matter what I'm thinking here, right? It all matters with regards to the setup we see. So what I'm showing you here is irrelevant. This is what I want to see. This is my thinking process. These are some ideas. It's the setup that's important, right? This short is validated when we close below the bullish fair value gap and get a setup to go short, right, from there, okay? This long from this fair value gap is an idea that needs to be validated with time and setup. And I want to use the setup that I've been teaching you on that 1 minute chart, which is the use of fair value, the inversion fair value gap, okay? That is a high probability setup, or the bullish breaker, okay? We don't just long because we've come into a fair value gap, right? Because this could continue to a higher time frame objective of 2700, and even there continue to 685, as I've explained. Okay, so these are just ideas. We don't trade off ideas, we trade off setups. Okay, so that's what I am looking at for next week. I want to see price movement down. Okay, now I can still be wrong. We could still go higher up into 3,000, right? But experience says that when you have at least 3 or 4 days of long breakout long traders in the market, then that is a good time for the market to have a pullback. Okay, so I hope that video is useful. When I talk with you in a future video, I've still got to do a separate video for you on macro time that's coming. Okay.